All right, good morning, everybody. So the data just came out, DOE data, and crude oil is still trading higher. Right now, crude is up about 2.5% on the day. OC is trading at 67.38. We're joined by Andy Lebow of Commodity Research Group. He's been joining us recently after the data the past few weeks to give us the insight on what the data is actually telling us. So, Andy, welcome. What's going on?
Well, thanks again for having me on, Michael. I thought the data was a mixed bag, but mostly constructive, which is what the market's reflecting after last night's API reported draw. We had a confirmation today of by the EIA with a pretty healthy 6 million barrel draw in crude stocks, which to tell you the truth, is not all that surprising after the unanticipated builds we've seen the last couple of weeks. And I think we mentioned last week that we were anticipating seeing some crude stocks to draw over the next couple of weeks, and before they start building when we go into turnarounds. I think the crude stocks were at 23 days supply, and that means what it is. That's inventories divided by demand. The 4-year average is 25, and to me, crude still looks constructive, at least from inventory basis, and I think the market is going to start anticipating these builds going forward. Gasoline, as we've mentioned the last couple of weeks on the Opportunistic Trader, there's nothing really that interesting in gasoline, and that continues. We had a modest build. Days supply are 1.5 days above the 4-year average. Gasoline demand is nothing to write home about. The EIA is not expecting going forward that gasoline demand is going to be anything to write home about. So to us, gasoline looks neutral to bearish. Distillate stocks. Now here's something that's beginning to change. Distillate has really looked great all year, but we're building pretty good here on distillates, and what's happening is refiners are really cranking it up on the distillate side. They're making a lot of distillate, and this week I think the number was 5.455 distillate production, and that's in anticipation of pretty strong yields, and also in anticipation of decent diesel demand going forward globally. So distillate is one that's beginning to change from, hey, it looks really bullish, to if they keep making this much diesel, that's really problematic. And the builds are all in pad 1 up here, which is also something to worry about. Total stocks drew a little bit. They've built a lot in the last couple of weeks. We're at 59 days versus the 4-year average 61. Looks okay. And Cushing is beginning to build. I think we're going to see one more draw, but that's going to start building from here on out. Canada's back up pretty strong, and or will be at full capacity. So I think we're going to start seeing Cushing build nicely, and the market has sort of anticipated that with these spreads having really come off. So all in all, a mixed bag. And the one thing I take away from this is distillate is changing. Also, demand is not, it's not booming. It's not terrible. Last week, Michael, when we were talking, the market was really wringing its hands about demand going forward, and we're not really seeing evidence of like a real collapse in demand by any means.
Has the higher price that we've seen over the past 12 months had a effect on demand?
Yeah, I think so. I think for gasoline for sure. Pump prices are significantly higher than they were a year ago, and as a result, we're seeing no growth in gasoline demand. So yeah, I think higher prices have had an impact a little bit on the diesel side as well.
I saw an article in the Journal earlier. I was talking to Phil Flynn about it before. About I believe American Airlines is canceling some flights based on what they're talking about in the Journal. Part of it is due to jet fuel costs.
Yeah, yeah, and jet fuel being another one that where prices have increased. Although, I think airline demand has still been pretty. The load demand has been pretty strong. So, one always wonders, about some of these airline stories about what the real story is. Because usually they just pass it on. They'll pass
Right.
on the higher cost, but there's probably a little bit to that.
Yeah. What about at Commodity Research Group? Anything you're looking at right now that really catches your eye in the commodity market?
Well, I think in terms of oil, last week we talked about the market trading at a big trading range, and it's ratcheting between pretty well defined support and resistance, and it continues to do that, and we think that we're going to start seeing this. But I have to say, over the last week since we spoke last, Mike, we did a deep dive on some of the numbers and really got into the weeds on where we think OPEC production is going to be, where we think short term, where we see demand. We had to tweak that because those numbers, there could be a 500,000 barrel swing either way, depending on a lot of factors. But using our best guess estimates, it does look like fourth quarter looks pretty bullish, which is not a big surprise. I think many analysts are looking for a fourth quarter, bullish fourth quarter, and maybe less so in the first quarter. But doing all the numbers on Iranian exports, I just don't see how it's not going to be at least 1 million barrels a day, 1 million barrels a day lost. And I think what's key, you look at who's growing production, obviously the Saudis, but we also have to depend on Libya and Nigeria, and there are two fairly undependable producers. So there's certainly a lot of uncertainty on the supply side, and as I mentioned, I think the market was way overreacting on the demand side. And to me, anytime you get these like demand sell-offs, which is also part and parcel, I think, of speculative liquidation, I think those are going to be pretty short-lived, Michael, because going forward, the market fundamentally looks pretty good, and even shaving demand, the I have it up 1.45 coming in this year, and probably 1.38, 1.4 for next year. You know, if I shave it, it's only going to be a couple 100,000 barrels a day. That's not all that much.
Yeah, well, it's interesting. So we just had 7 down weeks in energy, and everybody was talking about that. But now, in the past, in the October contract, we touched a low. We got below $64 about 5 or 6 trading days ago. One, two, three, about 6 trading days ago, and here we are right now at 67.60 right now. So a lot of that fear has been erased on the short side. So it's
Right.
always interesting.
Yeah, and I also think, and on a fundamental side, you did have there was increased production. We don't know by exactly how much by the Saudis, and I think as we mentioned last week, Libya probably increased production by about 400,000 barrels a day. So I guess we should say, OPEC and some non-OPEC producers, have increased production, and the market also it's been long all year, Michael, right? I mean, you get these CFTC reports, you're like, oh my goodness, 21-1. That's crazy. So you had to have some liquidation.
Yeah, yeah. All right. Well, hey, thanks a lot for the information, taking the time, letting us know what the stats actually showed and other insight. Thanks a lot for joining us, and we'll look forward to speaking to you soon.
Anytime, Michael.
All
Thank
right.
you.
Have a good day. Talk to you later.